What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible and also practical. So without further ado, let the intro roll and I will see you on the charts. The pair that I want to speak about in today's video is GBP AUD. The reason being is that this pair is very near to providing to us a good trading opportunity. So obviously I want to show you guys exactly the situation that we currently have on it and how we can be looking to take advantage for a potential trading opportunity. Now, as usual, first, I will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective on the GBP and obviously also on the AUD, to see how hedge funds, so the biggest speculators in the market, are moving their positions in time and basically shifting their overall positioning on these two pairs, so that obviously by being able to trade alongside these big speculators in the market, we do have an advantage over our competition in the market. And by the end of the video, we will know exactly where we can be looking for the highest probabilities on GBP AUD. Now, starting here from the monthly time frame, what do we have? Now, here on the monthly, we can see that at the moment the market is testing an extremely strong monthly demand area. In fact, from here the market had started all this move to the upside. Currently, we can see that the market has tested multiple times this very strong support area here on the monthly. And overall, what we can expect is for the market to provide a deeper correction, specifically because, as you know, in the market, if you have an impulse and you want to measure a possible retracement, you have to take your Fibonacci from the high to the low of the impulse. But in this case, since we have this massive impulse, if we actually measure the potential retracement, so if we take our Fibonacci from the high to the low, we can see that the market hasn't even retraced to the 0.382 yet. And what we can also notice is that at the moment, the 0.32 is currently lining up with a quite strong structure area, basically creating a confluence of resistance zone. In fact, this is actually a historical structure level for this market, which was acting as resistance here. The market then broke above the area, and at that point, this previous resistance was turned support here. The market tested its zone and rejected it to the upside, and currently, after the market has broken back below the area, all this previous support is now turned resistance here. And what we do expect is for the market to provide a correction to test this resistance before then possibly providing a continuation to the downside. So at the moment here on the monthly, we have a confluence of resistance at this area that we do expect the market to go and potentially test. And since we have already identified at the beginning of the video that this area is very strong demand, we definitely do expect a rejection higher. Going down on the weekly time frame, what do we see? Now here on the weekly, we consider at the moment we have already the creation of a triple bottom at this area. The market tested the zone here and got rejected to the upside, again here and got rejected, and again here, and the market rejected to the upside. And what we can also notice is that at the moment, what we actually have is a nice impulse to the upside followed by this correction. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse, as we have already seen. And in this specific case, we can see that if we take our Fibonacci, the market has just corrected exactly to the 0.32 of the Fibonacci taken on this weekly impulse, which is the first retracement level that you do expect the market to hit before a possible rejection higher. So at the moment, monthly and weekly are showing for a potential move higher, are showing definitely the possibility of seeing the market creating a continuation to the upside to complete this impulse correction and impulse pattern to the upside here on the weekly time frame. If you have any questions or requests for the next video, make sure you leave them down in the comment section. Also, make sure that you smash that like button and subscribe. Going down on the daily, what do we see? Now, on the daily, we actually see a completely different price action and structure. In fact, here on the daily, we can see that at the moment, the market has just broken below the previous low. In fact, this zone was acting as very strong support, and now the market has broken this support to the downside, meaning that as we are speaking, this previous support is now turned resistance here. And what we can actually expect is for the market to go for a completion of this previous support, now turn resistance, and basically a retest of this level. Now, why am I saying that? The reason for which I'm saying this is because at the moment the market has just provided this M formation. Now, when you see a market create an M formation, so impulse, correction, the market tries going higher, however, it then fails and creates a move lower, breaking below the previous low. This is the creation of an M pattern. And after an M pattern, what you expect is for the market to provide a move to the upside to go and complete the pattern itself at the previous support and now turned resistance here on the daily time frame. Now, if we go and see what we have from a COT perspective, so commitment of traders perspective, which is what hedge funds are currently doing in the market, what we can see is that with the last reports on the pound, hedge funds have been increasing their net positions. In fact, we went from having 7.9k net positions, so more basically longs than shorts, but not that much, to now having 22.1k net positions, so way more longs than shorts. Actually, I will show you here because it's even easier to see for you guys. So as I was saying, on the pound, we went from having 7.9k net positions to having 22.1k net positions. So massive increase of the net positioning. And currently we're sitting with 60.2k long positions on the pound and only 38.1k shorts. Now, it is true that with the last report, we haven't seen any longs getting added. However, overall, we did see 1.2k shorts getting closed, and again, net positioning increasing for the fourth time in a row, actually third time in a row. So we have seen some proper increase on the pound, which is getting stronger, which means that we can see the market complete this M formation at the neckline. It's definitely a possibility. And if we go and see what we have on the AUD, we can see that overall on the AUD, we're getting weaker and weaker, which is exactly what we need. In fact, we went from having 5.4k net positions, so a positive net positioning with more longs than shorts, with 60.4k longs to 54.9k shorts, all the way down to having the completely opposite, so a negative net positioning with more shorts than longs, 57.4k shorts and 54.6k longs, with 1.3k shorts added with the last report and 1.2k longs getting closed. So overall, what is happening is that we're getting a stronger GBP and a weaker AUD, which is exactly what we need for a move to the upside. If you want to see GBP AUD make a move to the upside, you need a strong GBP and a weak AUD. And in that case, you will see an uptrend. In this case, what we want to see is the completion of this M pattern, which means that overall we can definitely see this move happening. So how we will be approaching this potential opportunity? With students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes, those are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best timeframe is the 4-hour anyway intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the downside. And until the market will remain bearish from an intraday perspective, we will not be looking for an opportunity because obviously we would be longing a bearish market, which is never a good idea. However, as soon as the market will shift from an intraday perspective from a bearish to a bullish market, at that point, we will be adding GBP/USD to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to complete this M formation at the neckline, which is the previous support, now turned resistance here on the daily time frame. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also let me know in the comment section below any pair that you would like me to break down in the next videos. And I will also leave a link to the mentorship program in the description. It's a very complete program. First, you get all the rules of my rule-based strategies, and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as answering any question that you have every single day. So it's a very complete program. I really suggest that you go and check it out, and I will see you in it.